Silver prices are not what you think. In fact, the number you see on your screen right now is fake. For years, they've fed you a story about supply and demand, natural market forces, price discovery through free trading. But last week, a leaked internal report from a major bullion bank exposed something none of us were supposed to know. The price you see on financial websites, it's not determined by how much silver exists or how much people want it. It's determined by a handful of banks trading paper contracts they can create out of thin air. If you think silver crashed because of market fundamentals, you're wrong. The crash was manufactured, deliberately engineered to achieve specific objectives that benefit the few at the expense of the many. In the next 18 minutes, I'll show you exactly how banks manipulated the price, what they're desperately trying to hide, and why the real move in silver hasn't even started yet. Because what's coming next will shock everyone who believed the mainstream narrative. Before we continue, drop a comment below. Do you think silver's real value is being suppressed? I want to know where you stand. Now let me show you the lie. Here's something most people don't understand about silver pricing. When you check the price of silver online, you're looking at the COMEX futures price. That's the New York Commodity Exchange where silver contracts are traded. But here's the critical detail they don't tell you. The paper versus physical disconnect. Less than 2% of COMEX silver trades ever result in physical delivery. Let me repeat that. 98% of silver trading on COMEX is pure paper speculation. No actual metal changes hands, it's just contracts. Promises to deliver silver at some future date, being bought and sold over and over. How the suppression works. Banks can sell unlimited paper contracts without owning any actual silver. Imagine if I could sell 100 cars I don't own, flood the market with those fake cars, and drive down the price of real cars. That's exactly what's happening in silver. When banks want to suppress the price, they dump massive sell orders into the futures market. Thousands of contracts, tens of thousands. The price crashes. Retail investors panic and sell. Mission accomplished. The physical market tells a different story. But here's where it gets interesting. While paper prices were crashing, physical silver premiums were rising. Coin dealers were charging $8, $12 over spot price. In some cases, premiums hit 15s. Why? Because actual physical silver is getting harder to find. The paper market says there's too much silver, prices falling. And the physical market says we can't get enough metal, pay us more. One of these markets is lying. And it's not the physical market. Something big is building inventory at major vaults is draining. Delivery requests are spiking. Refineries are running at maximum capacity and still can't keep up with demand. This is not normal market behavior. This is a system under stress. And here's the shocking part. The institution suppressing silver just made a massive mistake. And it's going to backfire harder than anyone expects. Let me show you what happened. In late January 2026, something extraordinary happened at COMEX. A major industrial buyer, we're talking about a company that needs silver for manufacturing, demanded physical delivery on 5,000 contracts. That's 25 million ounces of actual silver. The system wasn't ready. COMEX scrambled. They had to pull metal from multiple vaults. Deliveries were delayed. Some bars didn't meet the required purity standards and had to be rejected. It was chaos behind the scenes. And this revealed the dirty secret of the paper silver market. The system only works if people don't ask for the real thing. It's like a bank that operates on fractional reserves. As long as everyone trusts their account balance is real and nobody tries to withdraw everything at once, the system functions. But the moment people start demanding physical withdrawal, the illusion collapses. Why this matters? For decades, the paper market worked because most traders were speculators who never wanted actual silver. They just wanted to profit from price movements. But now we're seeing a fundamental shift. Industrial buyers don't trust the paper market anymore. They're demanding physical metal. Long-term investors have learned from past manipulation. They're taking delivery and storing privately. Even some institutional players are rotating into physical. The contradiction: banks built this entire suppression system on one assumption, that the paper game could continue indefinitely because nobody would call their bluff. That assumption is breaking. Engagement trigger. Let me know in the comments, would you rather hold paper silver or physical silver? Your answer reveals everything about whether you understand what's really happening. And what happens next is the part nobody is prepared for, not even the banks. While retail investors were watching paper prices crash and panicking, something completely different was happening behind the scenes. Countries are accumulating. China's industrial silver imports hit a 10-year high in 2025. India's government just announced a massive solar expansion that will require 200 million ounces over the next 3 years. Mexico, one of the world's largest silver producers, is now keeping more production domestic instead of exporting it. Industrial demand is exploding. Electric vehicles require 25-50 grams of silver each. EV production is doubling every 18 months. Solar panels need 20 grams each. Solar installations are growing exponentially. AI data centers require silver for high-performance electrical connections, and AI is the fastest growing sector in technology. This isn't luxury demand that disappears in a recession. This is mission-critical, inelastic demand. The supply problem. Meanwhile, global silver mine production has been flat or declining. New mines take 7 to 10 years to develop. There are no major new silver deposits being developed right now. Existing mines are getting deeper and more expensive to operate. The banks know. And here's the twist that should terrify you. While banks are publicly telling investors silver is overpriced, don't buy, they're privately accumulating massive physical positions. JP Morgan alone has reportedly accumulated over 1 billion ounces over the past decade. Think about that. They suppress the price through paper manipulation, then buy the physical metal at artificially low prices. It's the perfect crime. And they've been running this playbook for years, the quiet accumulation. This is not retail FOMO. This is not speculative gambling. This is smart money positioning for what they know is coming. The real move is happening behind the scenes, quietly, deliberately. And I'm about to show you the one event that will send silver into a breakout the world cannot ignore. Every market has a breaking point, a moment when all the hidden pressure suddenly releases. For silver, we're approaching that exact moment. Trigger number 1, the dollar decline. The US dollar has been losing reserve currency status gradually. Countries are settling trade in alternative currencies. When the dollar weakens significantly, commodities priced in dollars surge. It's mathematical. Silver, being one of the most undervalued commodities, will move hardest and fastest. Trigger number 2, the supply crunch. We're heading into a scenario where industrial demand cannot be met by available supply. When Tesla can't get silver for EV production, they'll pay any price. When the Pentagon can't secure silver for defense systems, price becomes irrelevant. Trigger number 3, the paper market break. This is the big one. At some point, and it could be this year, COMEX will face a delivery demand they simply cannot fulfill. When that happens, they'll either default or change the rules to force cash settlement. Either scenario destroys confidence in the paper market and sends everyone rushing to physical. The coiling spring, think of silver like a spring that's been compressed for years. The manipulation, the suppression, the artificial price ceiling, all of that is compression. The more you compress a spring, the more violent the release when it finally snaps. Silver has been coiling like this for over a decade, and the pressure is reaching maximum tension. Small trigger, massive reaction. In highly compressed systems, it doesn't take much to cause an explosion. A single failed delivery, a regulatory change, a major industrial buyer going public about supply problems. Any of these could be the spark. Engagement trigger pause right now and comment, do you think silver hits $50 first or $100 first? I want to see what this community is thinking. And what I'm about to show you next is the part that changes everything, the part about what actually comes next. Let me walk you through the 3 stages of what's coming. This isn't speculation. This is pattern recognition based on how every suppressed commodity behaves when the suppression breaks. Stage 1, the crack. Already beginning? This is where we are now. Increasing delivery demands, rising physical premiums, vault inventory declining. The paper market is showing its first cracks. Most people don't see it yet, but the insiders do. This stage is characterized by confusion. Mainstream analysts can't explain why physical is tight while paper prices are falling. Stage 2, the rush, coming soon. This is when awareness spreads. More investors realize the paper price is fake. More industrial buyers panic about supply. The rush to physical accelerates. Premiums explode. Wait times for delivery extend from weeks to months. COMEX either defaults or implements emergency rule changes. This is when price starts moving violently. Not because of speculation, but because the old pricing mechanism has broken and a new one is being established. Stage 3, the revaluation, the final stage. This is the end game. The paper market is dead or irrelevant. Price discovery happens purely in the physical market. Industrial buyers bid against each other for available supply. Governments potentially get involved. Silver doesn't just spike, it revalues to a level that reflects its true scarcity and industrial criticality. We're not talking about $50 or even $100. We're talking about a price level that actually makes industrial buyers reconsider their production methods. Why suppression will fail. The suppression worked for years because it was paper fighting paper. But now paper is fighting physical reality. You can create infinite paper contracts. You cannot create infinite physical silver. When physical demand exceeds physical supply, no amount of paper manipulation can change that. The timeline, I can't give you an exact date. Nobody can. But the pattern is clear. The cracks are forming. The pressure is building. Stage 2 could begin this year, possibly within months. What this means: the next move is not a spike that reverses. It's a permanent revaluation of silver's role in the global economy. The old price was a lie. The new price will reflect reality. And reality is that silver is far more scarce and far more critical than most people understand. Let me bring this all together. The lie they told you. They told you silver prices are determined by free markets. They're not. They're determined by paper manipulation on exchanges designed to suppress the price, what the banks are preparing for. While telling you to sell, they're accumulating physical. While crashing paper prices, they're draining vaults. They know exactly what's coming. That's why their actions contradict their public statements. You were never supposed to know this. The system works best when people trust the official price and never question how it's determined. Most people still don't understand the paper versus physical disconnect. Most people still believe the mainstream narrative. That's why they'll be caught completely off guard when stage 2 begins. The choice. You have a choice right now. You can dismiss this as conspiracy theory and stick with the mainstream story. Or you can look at the evidence, the vault drains, the delivery problems, the physical premiums, the industrial demand, and recognize that something fundamental is breaking. This is not financial advice. I'm not telling you what to do. I'm showing you what the smart money is already doing. I'm showing you the disconnect between what they say and what they do. The rest is up to you. Final message. The greatest opportunities come from seeing what others refuse to see. The paper price is fake. The physical shortage is real. What comes next will shock everyone who believed the lie. Make sure you're not one of them. Subscribe to this channel because what I'm about to reveal next makes everything we covered today look small. The silver event I'll expose in the next video is the one even the banks are terrified of. Don't miss it.